Welcome to Momentum Monday. Howard, which company do you think will be the next one to hit $1 trillion in market cap?
Yeah, it's a great question. We'll get into it in today's show, Ivan. Back in San Diego. You're in lovely San Diego too. Or are you in Venice again?
I'm in San Diego. I was in LA this weekend. I'm back in San Diego.
What were you doing in LA?
Just visiting some friends.
So you have friends?
Yes, I do.
And were those approved by our company?
Do they have to?
Were you doing late night stand up Bulgarian? Were you doing your wait a minute? I'm having a senior moment. Which comic are you?
Oh, I'm not famous yet, but just wait a couple of years. Yeah.
Come on, which comic do I call you?
It was Gary Shandling or something like this.
For everybody that does not know, Ivan might have genes dating back to early Shandling, and I think he'd be a fantastic stand-up comic because you don't realize how. See what I mean? Then that was perfect delivery of nothing. You are like the Bulgarian Jerry Seinfeld. Okay, and how's married life? How's your lovely girlfriend?
She's a little sick, but other than that.
Of you or just sick?
Probably of me too, but.
Well, I would be sick. I mean, you have pictures of Venice, yet you've never taken her there. Like, why? That's false advertising.
That's true. False advertising, exactly.
So she may be a little upset that you keep teasing Venice, but yet have not taken her to Venice. Although she's European, so maybe she's been to Venice.
Yeah, I think she's been there, yeah.
Yeah, so maybe you should have a picture of Aspen, and then you can both go to Aspen.
Yeah, send me some pics.
All right, let's get into the weekly momentum. I think a lot has changed since last week, buddy. The looks like Apple has saved the market for now.
Yeah.
And, we'll take it. We don't care why. We only care that it happened. So we will lead with Apple. These charts that you're seeing are courtesy of our sponsor, MarketSmith, who have signed on for a year. They are they like the kitschy nature of what Ivan and I do, the backward ass way that we think about the markets, but are comfortable using the fantastic data and charts. So hopefully everybody is enjoying it. We appreciate MarketSmith and investors.com, who are really digging into communities like StockTwits and trying to find the next generation of people. And so thank you. Wow, look at this breathtaking. In hindsight, obviously, Ivan, this looks inevitable. If you looked at the chart before this last breakout, Ivan, let's go back to it daily. You would say it seems inevitable. If we take out this gap and you were just looking at this chart and trying to predict what was happening without even knowing about the market, and you didn't even know the name of this company, you would say, geez, it's just an uptrend, buy the dips. That's worked. If we go back to a weekly, Ivan.
Yeah, the market tends to do what surprises the biggest number of people. And after we saw the tepid market reaction to Amazon's and Google amazing earnings, many people did not expect Apple to actually follow through, but they did. And as of right now, earlier today, I saw Charlie Bilello tweeting that 75% of the S&P 500 company already reported earnings. And as of right now, the year-over-year earnings growth is 30%. The year-over-year sales growth is 10%, which are the biggest numbers since 2010.
Yeah, what we're seeing is networks unleashed, global social networks unleashed. You're going to see politicians take credit for this in the midterms. They have nothing to do with Amazon. If anything, they've tried to tamper down. If we've heard the president's rhetoric, the rhetoric has been, I hate Apple, I hate the iPhone, I hate e-commerce, getting away with no taxes. The post office is going to double rates. We're going to raise steel prices, blah, 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 blah. The price action is what speaks here. If we look at Caterpillar, which is all his rhetoric talks about, is saving Caterpillar. We can see that it's in its own little bear market, and pretty much at 2014 prices, and started its run well before Trump was elected. And as you can see, the rhetoric stocks, if we look at the defense stocks, if we look at all the things that are rhetoric driven out of this presidency, maybe look at Lockheed Martin or Boeing. Boeing's continued to be a growth company, to be honest. You can see Lockheed Martin. The rhetoric stocks are in kind of a correction. So it's not the words, it's the actions. And what you have is Apple is a huge beneficiary of the policy of this administration and past administrations, in the sense that now they can repatriate profits. They've got basically a regulation-free government, and they can do what they want. So let's go back to Apple. If we try and extrapolate what was going to happen, it seems obvious in hindsight, but to the victors go the spoils. So congratulations to people long Apple. Now, if we squeeze in daily, I mean, I don't know how you stop this company now that it's crossed $1 trillion. They've surprised everybody on earnings, as I talked about over the last months and months and months. Subscription is their business, and the multiple could actually increase as hardware as a percentage of revenue drops, or as a percentage of recurring revenue. Wall Street likes recurring revenues. If we look at Intuit, Microsoft, any of the companies that have been focused on recurring revenue, the companies have done great. So Apple, it's a safe haven right now if people want to take some money off the table and take some money out of higher multiple stocks and put it into growth stocks that have lower multiples. Apple's just a perfect. You've got Buffett in there going to be buying the dips. It's 4% of the S&P. So not to bore you, Apple, as Apple goes right now, they are a tell for this market. Tonight, Twilio reported, that company no one's ever heard of, but a company that's been in our portfolio a very long time, reported. And the stock is up, Ivan, I think $10.
Yeah, it's about 72 last time I checked. So
hang on one sec, Ivan. So pull up Twilio. What do we see here? That
so it's at all-time highs after hours. It's definitely above 70.50. So it's trading about $72 right now. From well, we cannot see that here, but trust me, it's there. 73.50.
So all-time highs tonight. They are in a dominant position outside of Amazon of offering. We talked about it months ago when we started talking about this in the 30s and 40s. Is they're offering a service to do-it-yourself scaling of communications. So it's kind of communications as a API and as a platform. And thousands of companies are signing on to use this service. Just makes communication easier within corporations talking to customers, and they're just in the right spot at the right time. Relative strength A+. Earnings per share is their weakest issue, but again, they've proven that they can make money, and this quarter is getting them even closer to that vision. And this should continue to scale. Will never be cheap until they absolutely get annihilated, missing numbers. And so you've got to keep an eye on obviously the growth, not slowing down. This is a momentum stock completely, but a great business. Another brand that's in our portfolio, Etsy, reported, and also trading at all-time highs tonight. And as we talked about why we like this company, I think it's trading after hours, Ivan. Let me just take a look.
47, close to 47.
Wow. So I think if we started talking about this in the low 30s. Yeah, 46.85. It's hard to buy great companies after they've tripled. But why we liked it at 30 is that the model was finally making sense. Right? The turnaround, people earn their money at $9 buying this thing and making it triple. The growth and momentum investors are going to reap the benefits now as this company proves that it can make money. The machine that it built, the e-commerce machine that it built for craft people and their customers, is just a machine now. And it's just a matter of putting more people into the machine. They beat numbers again. This company will continue to beat. Will it be undervalued? No. This company cannot afford to miss. So that is what happens with momentum. But as long as the machine gets fed and managed properly, this company will continue to grow. Because you can't disrupt the machine that they have. Only they can wreck the machine. And so it's a question of how big, eventually size matters. But right now, this is a small business still at, less than $1 billion. I think I remember. What's the market cap? $6 billion?
Yeah, after I was probably close to 6.
But if you look at the numbers, they've gone from 26 to like 80 cents in like 3 years. Or projected 80 cents.
Yeah.
They're going to upgrade this 2019 numbers. So this is like how growth works. And it's now going to look expensive forever. At $9, it looked terrible. And that's because the machine was not working. So again, it just depends on where you like to buy in the cycle. We like to buy things that are working and then bet on them that they should continue to work. It doesn't work perfectly. And there are moments like last week when it's terrible. Ivan, let's get to some new names because this market is...
Yeah, let's talk about some new ideas. You wanted to talk about SendGrid, which is setting up on several time frames.
Yeah, so let's talk about this business. StockTwits has used it in the past. We use MailChimp for sending our emails, but SendGrid is email and communications delivery platform for all kinds of businesses. It's a competitive environment. Like I said, they're competing against MailChimp, Campaign Monitor. There's a ton of email delivery businesses. What I'm hearing from SendGrid, and there's no one perfect solution, is the customers are really happy. They're signing up tons of customers, and I've heard great things about the CEO from the original VCs, Brad Feld, in the deal. I've seen him reach out to our company at the CEO level and try and get us onboarded. So it's a huge space, highly competitive space, but this is one of those businesses that once it gets to profitability, which it is in 2018, and it can break into this all-time high zone, keep an eye. This could be, this could be a big name.
Yeah,
Don't own any right now. Don't own any right now. Yeah,
I think it's off to the races. And then there are a few other IPOs that I wanted to mention that I think are acting really well. DocuSign.
Pretty much a monopoly in terms of average Joe getting an email where they got to sign something, whether it's a mortgage, etc., online. Kind of a lot of IPOs over the last 6 months. This one's holding in the best, or relatively one of the best in software. Great relative strength. It's in the right space. Definitely profitable now. Profits expected to grow. A well-oiled software machine. The question is, can they keep the machine happy? Can the product continue to be updated at their size? This is not a small business anymore. This is a huge company with a high multiple. I don't own any, but Ivan likes it.
It's already a $9 billion company. And
not a small business.
Yeah, it's not a small business, but definitely, I think bright future. The question is how the market is going to price it. I think short term, I'm bullish from a swing trading perspective. Another one that I think is very interesting, it's an IPO, Blackline. It's like the Intuit, but for corporations in a way. They recently reported pretty impressive earnings with 100%, actually 200% earnings surprise. The market expected a loss. They reported a profit, and their sales continue to grow at 30%. So this is, let's pull up a bigger time frame. It's setting up near all-time highs. I mean, it's already doubled since their IPO, but it's a name that I'm keeping an eye on.
Okay. Got it.
A few other names in the retail space. I think Nike is looking incredible here. It's building that new base. If it clears here 81, I think it's again off to the races.
You know how I feel, love it. I read this story. Let me just pull up this article that I just want to read the facts of this story. What I found was interesting about Nike was athleisure. I call it fashology, but I was reading this trade magazine. Athleisure has taken over the sneaker market as shoppers ditch performance. Okay, so we are in an era of millennials and snowflakes, and I think this, they're going to call it athleisure. I'm going to call it fashology, and I just don't know how this cannot be part of a portfolio on dips. This is one of those 8 to 80 brands that $3 a share expectations in 2020. It's not cheap. It's not a beginning company, but in an era of where Apple just broke out. Again, one thing that concerns me about Apple and Nike would be the size is the U.S. dollar, which is very strong. These companies are so big that macro issues do matter, and policy does matter. So again, these are a little bit harder than pure software companies. But yes, Nike continues to set up technically perfectly, and everything is set for the stock to scream higher. And by scream for a company like this, it's not going to gap up 20, 30%. It would be lovely if it did. But with the macro issues in a strong dollar, I don't think it's as simple as the company doing well. There's just a lot of issues in accounting that are going to have to factor in earnings. Okay, next up, Ivan, let's look at Disney.
Yeah, Disney is another one that I really actually like. It's clearing new multi-year highs.
Well, it's going to become a software company if we are right. And basically companies at all-time highs, a couple spikes to 120, which tended to be tops. So much stronger negative rise. This is rising amongst hate for Disney, right? They overpaid for this. The economy could not be better. You can see the relative strength is just defying the skeptics. ESPN's dead. Content business is hard, yada, yada, yada. But as Netflix becomes more of a content company, Disney looks relatively cheap because they already got content solved. Disney's content's 1,000 times better in hit rate than Netflix's content. So if they can get this offering right with whatever they're going to call it, they're going to have as many subscribers globally as Netflix within a couple of years, and people will pay for both. Will they pay for 100 other products? Disney just puts a stamp on it if they do it right that'll prevent the long tail from being able to collect, because everybody's going to pay for Netflix, Disney, maybe HBO. It gets harder in the long tail of Disney. So to me, Disney just has unlimited upside if Wall Street likes the new model.
Yeah, I agree. I think if you long Netflix, one way to hedge is by being long Disney.
Yeah, I mean, you can sell some of your position, either get long-term calls in the money on Disney. Again, if market corrects, last week looked ugly. I love the action in Nike and a Disney, and obviously the companies today that are reporting and blowing out numbers, because you can see it just barely gave back anything. I think the real damage has been contained to companies that have not delivered, like Twitter. I mean, if we look at Twitter, it's not bouncing because the numbers did suck. And that was the risk with Twitter. The stock was going up because not so much the company was executing so well, but because of the attention it was getting in the news, and because Facebook was doing so well. And we can see that Facebook has bounced and Twitter's just sitting there.
I think
Facebook because it's a leader.
More time.
Well, no, Facebook's bounced because it's a leader. Twitter has shown that they won't lead. They're focused on the wrong things, and that was one of our concerns of I'm long Twitter and hate taking giving back gains like I've given, but that was the risk with Twitter. The company has never shown that they can be trusted around financials and growth, and it's a risky play. So I think if you do not deliver, you will get punished. I'm looking at the solar industry, and that was another area I got punished. Look at this SEDG, SolarEdge, Israeli company. Figured the trade wars kind of been priced in. This has been the strongest solar play in the space. I'm speculating a little bit here, but it really held in well considering the rhetoric about China and solar. And you can see how punishing this market is. It just just started to look really good, and then bam, right back into its base. In kind of precarious. If this trade war continues, these are the areas that you just got to move your money out of. But okay to probe, but don't fall in love with anything in this space. You've got to keep your money moving into software and stuff that the government can't really get at. Anything new, Ivan, else? Let's go to the SL50 list.
Yeah, let's take a look at the list real quick. We have IIN, it's still in the top 10.
We talked about it yesterday or last week.
Yeah, last week. It's 160% in 13 weeks. I mean, while on number 2, it's up at all-time highs again. I think SGen, some of the biotechs are actually looking.
Yeah, I think looking at the biotechs here, Amgen probably being my poor man's play or my cheap. Wow, let's see. Seattle Giannis looks fantastic. If you look at Amgen, it's like above 200. I don't know how you do not own. If you don't own biotech above 200,
yeah, it's definitely looking.
You have to have this on your screen, Amgen, this week, and SGEN. I'm going to do some work on that, Ivan. So you have to have this on your screen. Yeah. So if you build a portfolio of 2 or 3 companies for a couple % of your portfolio, what else from biotech?
I think a new name is CF, which is a fertilizer company, looking very well on several time frames. I mean,
looks more cyclical though. Don't love these.
Yeah,
don't look
a cyclical company.
Yeah,
you have to pay attention to also cyclical breakouts as well, because they can go for a few years.
Understood, but it already has gone for a few years. Let's look at. So you got Amgen, yeah, got all these software companies, Mongo, Zendesk, Square, all the companies we've been talking about continue to stay on this list. Yeah, semiconductors.
And it's back near all-time highs after really strong earnings reports. So
yeah, this can't continue. I mean, I just don't want to add to these positions. I've been a seller in these trends. Keep going, but yeah, it's beautiful if you own it. Etsy. Intuitive Surgery, yeah, it's a fame. I'm just looking for some other biotech names that show up there. Keep scrolling down, Ivan. Myriad Genetics. So let's take a look at that. MyGen. Also, so if I was going to put a few stocks on the list, I guess you would start with SGen, MyGen, and Amgen. There's a lot of gens. It's like Russia. It's like Ola. So if I was going to build a portfolio of 3 biotechs from this list without knowing anything, these are 3 gens that may make up a trade for me.
Yeah, you should start a biotech hedge fund. With
just look for a little momentum in this space and a little diversification. These are 3 that you can buy, and leave yourself room to buy them down 10 or 15% until biotech gets weak. But that's interesting. If you want to spread the risk among 3, there's 3 on the SL50 list. Ivan, how do people subscribe to Market Wisdom if they want this stuff in real time and you're mentoring?
Or just go on marketwisdom.com and just check out our free trial. We offer a 7-day free trial, so you can see if the product is the right for you.
Yeah, Ivan's a great mentor if you're looking to get into this business and have a little more action than what I offer on a trend following basis and get swing trading. Was it $99 a month? How much is it a month?
Exactly, 99.
And you get Ivan in your pocket. No one will it takes about a year to get used to Ivan's what do you call it? Accent and his enthusiasm, which is.
Well, I don't talk on the blog, right? I just write, so you don't need to do that.
So he's a good coach to have in your pocket for it's a deal. And Ivan, are you liking the Market Smith charts? Seems like you're using them.
Yeah, I definitely like them. I like the ability to see earnings and sales growth and technicals on one page. It's definitely a time saver, and yeah, definitely like them.
Really, they've got it. I've given them some feedback on stuff I'd like to see for the next generation. But I'm telling you, man, if you really want to get a picture of a company, I haven't seen a better chart. And a little old school in its delivery, but it's working for Ivan. If it's not broke, don't fix it. They don't care about the snowflakes of this generation. They do from a socialist perspective, meaning they're backing guys like us who are talking to the younger generation. But I would say, go to investors.com, give it a trial as well, and try and try and look at thousands of charts if you're really into this space. This is another one you like, Ivan, Five Below?
Yeah, it's a retail space.
I've never been in one. Have you been in one?
Never been to one. I just like the price action. I don't need to be in one, right? I mean, I'm a trader. I'm not a long-term investor.
Okay.
So.
Well, this has worked well if you were a long-term investor. But okay, so there's Five Below. I'm trying to look at some other ones. The ones that I've kind of missed are this.
I think Melee is starting to look again good, and they report earnings.
Which one?
Mercado Libre.
Yeah, again, it's so in this era of rhetoric and hate and kind of America first. This America first thing is real. I mean, whether we like it or not, this is not going away for a few years at minimum. And if you were really comfortable building long-term positions, Mercado Libre kind of owns Central America or Latin America for payments and commerce and shopping, assuming they are, continuing to execute on their plan. But slowly, it's been out of favor this year. But stock's just done phenomenal, and with the right tailwinds behind it, obviously this company continues to be an incredible company. But in a little bit of a pullback here. Okay, what else, Ivan, on the list?
Let's take a look. I mean, there's software as a service. All those companies are looking good. DocuSign we mentioned. Roku, they report later this week. AMD semiconductors are really looking strong. Also, NVIDIA actually is looking amazing on weekly and on a daily. They also report in 10 days.
Wow. AMD is just, the millennials got that right. There's just a lot of good price action. I love being wrong. Last week I was a little nervous. This week risk is showing that it's continued. We haven't missed much. For those that bought the dips last week, instead of panicking, congrats. That's our job here, is to just kind of hold your hand. And hopefully the price action continues to next week. I think, listen, with summer almost over, it's going to take a Herculean effort by the markets to get this thing broken. So we should be good through next week, Ivan, and everybody have a great week.
Yeah. See you next time.
Okay.
All right, let me